Hi everyone. Before we start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 October-November Paper 2-1 question number 2. This is Paper 2, which consists of 4 questions. 2 of them will be of 30 marks and 2 of them will be of 15 marks. And the total time limit for this paper is 1 hour and 45 minutes. Since question number 2 is of 15 marks, ideally you should be spending about 17.5 minutes in order to complete this question. And in this video as well, we'll be attempting to solve this question under 17.5 minutes. So without any further delay, let's get started. Deepak maintains a full set of accounting records. The trial balance at 30 September 2024 did not balance and the difference was posted to a suspense account. The sales ledger control account and the purchases ledger control account are part of the double entry system. So sales ledger control account basically means all of our trade receivables and the purchases ledger control account means all of our trade payables. Okay, the following errors were discovered. Now we need to prepare the journal entries to correct each error. The narratives are not required. Let's take a look at the first error. A check received 610 from Sanjay, a credit customer. If we are talking about a credit customer, it means we are talking about our trade receivables. So this can be categorized as our sales ledger control account because trade receivables is calculated by preparing the sales ledger control account. It had been dishonored by the bank, but no entry had been made in the books of accounts. Okay. So what happened here is that we received a check 610 from Sanjay. So we considered this to be the repayment by our credit customer. So how we recorded this was we reduced the balance of our trade receivables. Then since we received check, we increased the balance of our bank account. But later on, it turned out that the check was dishonored. It means that the amount was actually not received by our business from Sanjay. So now there will be a reverse impact. We will now have to increase the value of our trade receivables since we did not receive this amount from Sanjay. And the other impact is that since we previously increased the balance in our bank account, we will now have to reduce it because it turned out the check was dishonored, we did not actually receive the amount. So we need to record these two within our journal entry. Now, sales ledger control account is trade receivables, which means that this is an asset. If we are talking about asset, the increment should be recorded on the debit side, right? Then we have bank that should have been decreased. Bank is also an asset and we're talking about decrement in this case. Decrement in asset should always be shown on the credit side. So those are the two entries. So we have our sales ledger control account on the debit side and we have bank on the credit side. And the amount for both of these will be 610 since we are just removing the amount that was previously entered. That is all for the first error. In this case, none of the entry had been made in the books of accounts. It means that this was the error of omission, which is why there is no suspense account involved within this correction journal entry because the errors such as the errors of omission, error of commission will not be disclosed by preparing a trial balance. Okay. Now for the second error, goods returned 240 by Kamal, a credit customer. So customer is returning the goods to us, which means that this is part of our sales returns. Had been credited to the sales ledger control account. This is correct, so there is no error there, but it had been debited to the purchases account. Remember that we are talking about sales returns. Sales return is part of our expense because we will no longer be getting this income of 240 from the customer. Expenses should be categorized on the debit side within our trial balance. But in this case, instead of debiting sales returns, we debited the purchases account. Purchase is also an expense. So the error we are considering here is the error of commission. We recorded the correct amount 240 on the correct side, which is the debit side, within the correct class, which is expenses, but we included it under the wrong heading. Now, we can categorize or split this error into two different errors. The first one is that the sales return is understated by 240. We should have included this amount, but we missed it. But then we included purchases when it should not have been included. So the purchases account is overstated. Now, the correction process is if something is overstated, we need to remove it. In order to remove it, we always need to enter it on the opposite side. Since we are talking about expenses, it usually goes on the debit side, but the opposite side in this case will be the credit side. So the credit entry will be purchases so that we can remove it from the previous debit side, then the understatement error correction is that we just need to record it on the correct side. We're talking about sales returns, which is an expense which is to be recorded on the debit side. So that's all in this case. Sales returns will go on the debit side. Then the purchases will go on the credit side. Again, there is no suspense within this because we're talking about error of commission, which will not be disclosed by preparing the trial balance. So it will not be included within the suspense account as well. Now the amount to be included is 240. That is all for the second error. Now for the third one, goods returned 150 to Kohli, a credit supplier. In this case, the customer itself is returning the goods. So we are talking about purchases returns. It had been correctly entered in both the purchases returns journal and the purchases ledger control account, but had been posted to debit of the sales returns account. Okay, let's see. Purchases returns journal is different to purchases returns account. So the correction within the journal was correct, but instead of recording it within the purchases returns account, we recorded it within the sales returns account. Again, we can split it up into two different errors. Purchase return is part of our income because we will no longer be paying this amount of 150 to Kohli, right? So it should go on the credit side. This was not included, so the purchase returns was understated. If something is understated, it should be recorded on the correct side, which is the credit side. So purchase return will have to be entered on the credit side. Then the other error is it was debited to the sales returns account. So the sales return is overstated. Now if something is overstated, we need to record it on the opposite side. In this case, sales returns is part of our expenses, which usually is recorded on the debit side. But since this is overstated, in order to correct it, we now need to record it on the opposite side, which is the credit side. In this case, we can see that both of the entries are made on the credit side. This is because this error resulted in suspense account because the trial balance debit and the credit side were not equal. Since the correction entries both are on the credit side, the debit entry will now be the suspense account. Let's write it down. On the debit side, we'll have suspense. Then on the credit side, we will once have the purchase return since this was previously understated. Then on the credit side, we will have sales return since this was previously overstated. So we are removing it by entering it on the opposite side. Okay, the amount for the purchase returns to be included is 150 and the amount for the sales returns that is to be removed is also 150. So for purchase returns is 150 on credit, for sales returns is 150 on credit. And remember, when preparing our journal, the debit total should be equal to the credit total. Credit total in this case is 300, so the suspense account will also have 300. That is all for the third one. Now for the fourth one, a credit note 498 received from Bharti, a credit supplier. Okay, we're talking about credit note. Credit note is always issued by the supplier in case of returns. And in this case, we're talking about our supplier, which means that we are talking about the purchases returns. So the purchase returns was of 498. It had been correctly entered in the purchases returns journal, but had been debited to the purchases ledger control account. Okay, so the correct amount was 498. And this should have been shown on the credit side. But what we did was we showed the amount of 489 on the debit side. Now we need to make this look like this. So what we need to do is first remove the incorrect amount of 489 from the debit side. So if we enter 489 on the credit side, these two will get cancelled out. So that's the first part. The second part is to show the correct amount on the correct side. So that will be 498 again on the credit side. Whenever there is opposite entry error, you always need to first remove it and then show the correct amount. So normally we just record the amount twice. But in this case, the previously recorded amount was incorrect. So we recorded that first in order to cancel it out. Then we recorded the correct amount on the correct side. So the total should be recorded is 489 plus 498, which results in 987. It should be recorded on the credit side for the purchases ledger control account. So that is the only correction in this case. And again, this kind of error will result in suspense account because the trial balance debit and credit will not be equal. That is why the debit entry in this case will also be the suspense account. So we have suspense and the purchases ledger control account. Okay, we've already calculated that the purchases ledger control account should have the amount of 987 on the credit side Now the suspense account should also have the same amount. That is all for the first part of this question. Let's move towards the next one. We now need to prepare the suspense account at 30 September 2024, clearly showing the opening balance brought down. Dates are not required. Okay, so we do not know what the opening balance was. Now let us look at the journal entries which included the suspense account. In this case, we can completely ignore error 1 and error 2 because these two did not involve suspense account. Now we just need to record errors 3 and 4 within our suspense account. So the recording process is quite simple. We just need to see on which side suspense account exists within that particular journal entry. For this one, we can see it's on the debit side, and for the other one as well, it's on the debit side. So on whatever side suspense account is, on that side we need to record the remaining headings. It means that we need to record the purchase returns and sales returns on the debit side within suspense account, and the purchases ledger control account will also go on the debit side, since both of the journal entries have suspense on the debit side. That is the rule of posting our journal entries to the ledger accounts. Let's write it down. So we have purchases returns on the debit side, sales returns on the debit side, and the purchases ledger control account as well. Okay, so the amounts will be 150 for purchase returns and sales returns, and 987 for purchase ledger control account. 150, 987. Always remember that suspense account will not have a closing balance because this is a temporary account, so we need to completely shut it out. In order to shut it out, we do not need any sort of closing balance. So whatever balancing figure we have will be the opening balance itself. And in this case, we have all of the entries on the debit side, which means that the balancing figure should be on the credit side. That balancing figure is the opening balance. Now let's calculate the total from our debit side. That will be 150 plus 150 plus 987, which results in 1287. So the balance BD will also be 1287. That is all for the second part. Let's move towards the third one. We have been given additional information. Trial balance included the following balances. We have the purchase ledger control account. This is our trade payables. We have the sales ledger control account. This is the trade receivables. Then we need to calculate the revised balances. Okay, let's start with the given balances. For purchase ledger control account, that's 8,640. For sales ledger control account, that's 12,420. Now we can just refer back to our journal in order to correct these headings because we have recorded those headings by correcting the given errors within our journal itself. For sales ledger control account, the only entry is on the debit side right here. Remember, sales ledger control account is trade receivable, which is an asset. If asset is recorded on the debit side, it signifies the increases. So we just need to increase the given amount by 610. Let's write it down. Plus 610. This results in the correct balance for sales ledger control account to be 13,030. Now we need to repeat the same process for purchases ledger control account. So for purchases ledger control account, we have the entry right here on the credit side. Purchase ledger control account is trade payables, which is part of our liability. If we are entering liability on the credit side, then it will signify the increases. So we again need to add 987 to the given value. So that is just going to be 8,640 plus 987, which results in the value of 9,627. That is all for this part as well as the entire question. If you found this video useful, make sure that you like the video and leave a comment below. And make sure that you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.